Hey traders, thanks for stopping by here, thetradinganalyst.com. This is Taylor Carver from The Trading Analyst, and we're going to get into these charts, so let's get right into it. All right, so Netflix here, we headed lower. Remember, we've been calling for lower prices here on Netflix for a little while, okay? As you can see, I'm just going to briefly cover why we've been calling for lower prices. And so you can better understand that, okay, really briefly. So first and foremost, we had a gap down right here. This was an earnings reaction. You can see that. And we headed lower and then a little bit sideways, and we never broke over this level, okay? Never were able to break over that level and sustain any kind of momentum to the upward direction, okay? Followed by this next action here. This is the last earnings reaction right here. We gapped up, again, to that same level. Let me draw that for you. Right here, that we weren't able to break above before. And we ended up failing right there and closing back below that support. And as you can see, big move lower happened since then. So big gap down on earnings, failed breakout on earnings, and has just been making lower lows and lower highs since then. So I'm just going to delete a couple of lines just so we can keep this chart super clean, all right? So now you know why we've been calling for lower prices, okay? So if it can't head higher on earnings, you know, what's really going to drive this stock higher? Well, nothing really, okay? And especially given the market conditions, it's really going to be a tough time for Netflix, okay? So with that said, let's move to the more shorter term levels here. I think we're at a point where we could get a decent bounce, okay? We could get a decent bounce. I definitely prefer to short it if we do head higher, but I'm pointing out this level because in the short term we could get some kind of a bounce, and I'm going to show you why. So here's that big gap up that we experienced. I'm going to move my face a little bit. Over here, this is a big time gap up that started this big breakout here for Netflix, and we gapped up over these price points. As you can see, it became support right there, and we never looked back since. Okay, now we're right back to this same level. All right, right back to that same level where we gapped up pretty big. So we could, as you can see, we clearly reacted off of it today with the lows of the day hitting that price point and then heading higher. Okay, so if we do head higher, and the other thing too is we also have this under trend line. You can see that this angle started here, got a bounce here, got a bounce here, almost hit it right here, and then today's low hit that level right there. Okay, so we could experience a bounce against this level, but just notice, you know, that these bounces are all lower lows. Okay, so this is a downtrend that we're in here for Netflix. You need to be very clear about that. Okay, obviously in the longer term, if you pull back the chart, you know, several years, 3 years, okay, obviously Netflix is in a major uptrend, okay? Even though this is kind of ugly action we've seen lately, we're still well above where we were at 3 years ago, making higher highs and higher lows, okay? So definitely got to keep it in context. But as far as the near-term action, which is really all that I personally care about, because I don't trade a time frame longer than 30 days from now. Most of my trades are under 30 days, ranging from about 2 days to 15 days to 20 days. Don't really go over 30 days. So with that said, if we do get a bounce, we've got a gap that may want to fill up here at about 320. That would be an area that I could see hitting. And if it does hit, that would be another shorting opportunity, in my opinion, because, again, this is the level we got rejected at last time, right around there, and you can see it was previous support there, and right here before we broke below it, used it as resistance there. Let's see if it's also Fibonacci retracement level. So I'm going to draw it from the highs here to the low right about there, And yep, you can see right around the 61.8 Fibonacci retracement level is right there between about 320 and 330 is going to be that level. So we've got a lot of things lining up around that level. We've also got the 50-day moving average, which is currently sitting right around about 335, but it's descending and angling down and heading lower because obviously the stock is heading lower too. So that's going to provide some resistance as well once we get up there. So we've got a lot of reasons to like Netflix for a short around these levels. Okay, so those are my thoughts on Netflix. The next one I want to take a look at is Amazon. And Amazon here is, you know, again, we're in a downtrend here in the near term since, what is this, October, or I'm sorry, since really September. We've been in a downtrend. Here's a high, lower high, lower high, lower high, low, lower low, lower low, lower low right here, okay? Notice the last time that we kind of had a gap down like this was similar to this action here, and you can see we got a short-term bounce after that. So if we close over today's high, then I could see then I could see Amazon bouncing. If it doesn't, then I do not think Amazon is going to get a bounce. It needs to close over today's high, okay? Because as it stands right now, you know, gap downs, that's not bullish, okay? That's not bullish. And we're making a lower low, okay? We made a lower low today. Here's a low, and here's that next lower low. So it's not like we've bounced in any kind of support or anything, okay? The other thing that's different, it's another bearish quality, is that in this instance, we actually closed above the previous day's low. You can see the previous day's low is right there. We closed above it right here. Over here, we ended up gapping down and trying to make a retracement, but ended up closing still below the previous day's low. Okay? Last time we kind of did something like that is right here. Okay? Notice how it's a gap down. It's a different looking candle, but it's the same type of thing. It's just a more of a doji candle, but we still gap down and then close below the previous day's low. And you can see we got a little mini bounce here, but it was very short-lived, and then we headed lower after that. Okay, so when you get gap downs, just like in bullish markets, when you get gap ups, that's bullish. Okay, here's, just for example, you know, here's a big gap up. Okay, after that gap up, we traded sideways, and then boom, traded higher. Okay, that's just one example of a gap up. Obviously, you know, we have gap downs in an overall bullish trend here that obviously rebounded and we headed higher after that. But right now you're seeing gap downs, gap downs, gap downs, gap down after gap down. Okay, same thing over here. You saw gap ups, gap ups, gap ups. You know, gap up, gap up. Okay, that's what happens in a bull trend. Right now we're in a bear trend. Okay, and when that bear trend is going to stop, I don't know. Okay, I don't know, but I don't think it's going to stop anytime soon, especially because we had all of our earnings releases. Okay, they already released earnings, and that didn't save any of the stocks. Netflix, Apple, Facebook, Amazon, Google, they all reacted poorly to earnings, and we don't have another earnings release until 2.5, 3 months from right now. Okay, so that's what I'm looking at for Amazon. The next one is Apple. Now, Apple is at a pretty big level here. It just gapped down into this level, and from a longer term perspective, this could be a bounce zone here for Apple. Okay, I want to see how it reacts, beyond today. Today was a great reaction to it. We gapped down into it, and then we closed green off of it. Okay, so short term, I definitely think that we could get a bounce from this level. Again, the market is very iffy at the moment, so all of these bull setups are tending not to really work out. Okay, So let's kind of see what happens. But if Apple is going to bounce, okay, this is where it's going to do it. Okay, why? Because we've got a ton of support. Look at all this sideways trading. Okay, between here and here. Oops. Look at all the sideways trading that happened between here. We kind of busted over it and below it a few times, but look at all the trading that happened in here. Okay, a lot of buyers and sellers. Okay, a lot of buyers and sellers, a lot of price memory around this price point between, today's low, let's call it between about 177 and about 167, just to give it a nice $10 range. Okay, so 177 to 167. This is an area where I think Apple could get a bounce on. And if you've been following along on our Apple analysis, we called for lower prices to hit this price point down to 177. We called for that right here. Okay, when Apple was trading at about 215, okay, we called for lower prices. We said it was going to head down. As soon as that earnings release came out and we saw the reaction to it right here, we said that Apple was going to head lower. First target was this range right there at 192, and then the next target was about 177, and it hit both of those targets. Okay, both those targets. All right, and that was free. All right, so I hope that you followed along with that, and I hope that really helped you out. If it didn't make you money, I hope that it at least saved you losses if you would have watched that video and taken that analysis to heart. So the next one we're going to take a look at is Chipotle. Chipotle here, I'm going to kind of zoom in. We have a little bit of a false breakout. Okay, false breakout. Here was that clear level of resistance right here. We broke over it right here, broke under it right here, and I think that most likely will continue lower. Today's gap down was only further confirmation. We have false moves. Similarly, okay, we called for higher prices back here on Chipotle based off of a false breakdown. Okay, you can see that there was that clear level of support right here. We broke it, only to gap over it right here. That was when we called for higher prices. We called for a first target to hit. Was right around this level, 477. The next target was up here at 495. Both those targets got hit. As you can see, it clearly got a reaction to those levels. So that's why we have those targets, so you can exit at a good spot, and then enter at a good spot, and then exit at spots where it's likely to see some movement off of it. Okay, so we called for higher prices on Chipotle. Now we're calling for lower prices on Chipotle. I think about 441 can get hit. That's kind of where it started to move from this point previously on that false breakdown. So I think that we can hit down there at about 441. Okay. Let's see. So that's Chipotle. I think it's heading lower. Twitter is another one I wanted to discuss. So Twitter is another one that we called for higher prices. Let me show you back here. Based off of this false breakdown setup. Here's that support. It broke that support right here. And then boom, flashed right back above it. As you can see, it headed higher since then. And it hit our target up here right on the high of this day. Almost hit that target on the dot. And that was where we recommended that you take some profits based off of this previous resistance that we saw right here. So that worked out perfectly. Now we have a breakdown, a gap down below this support, a gap down below this support here. This is a gap up. Okay, this is a big gap up, and we're below that gap support. Okay, we're below that gap support, and I believe that we're going to come down. Now that we're below that gap support, I believe that we're going to come down and fill this gap that's right here from the close of this day. And that is right the close of that day is 27.54. So 27.54 is where I think that Twitter is going to head to. I don't want to get too bearish on Twitter just yet because it did gap up on earnings and it did kind of hold those levels. But if you look at Twitter overall, it's been in kind of bearish territory for a little while. So this is kind of just more confirmation that we are seeing some bearish action. So a gap down below the gap support, that is why we're calling for lower prices. Next one is I want to talk about Alibaba. And Alibaba, this is one that had a false breakout. Okay, so you can clearly see a clear level of resistance, many days hitting there, many days hitting there, here, and then we broke over it right here. Nice looking breakout right here with a close above it for this day. This day confirmed it by trading sideways, and then boom, the following day ended up closing back below that support as well as back below the 50-day moving average. Okay, so again, overall, this stock is in a downtrend. Okay, if you looked at the last 100 to 200 days of Alibaba, we've been in a downtrend. Okay, the last time that we had a kind of false breakout was, look at this, right here. Okay, here was the last time that Baba had a false breakout. Okay, you can clearly see a clear level of resistance right there, closed over it with a nice strong candle over the 50-day moving average as well, and then confirmed that action. Obviously, this day didn't close above the 50-day moving average, but still above this resistance, and then boom, right here this following day, we ended up closing back below that resistance, making this a false breakout setup, and as you can see, it moved big down since then. So that's how powerful these setups can be. This is a false breakout with a big gap down today. I think it conservatively is going to come down and fill this gap from this day right here, and that is, the price of that is 136.33. 136.33 is where I think that Alibaba is going to head to next. So those are my thoughts on these stocks. If you have any questions, please feel free to reach out to me. I love to talk shop with traders who have all the common goal, the same goal in mind, and that's to profit from the market on a consistent basis. And so I'd also like to invite you to join our premium service here at thetradinganalyst.com for free. It's a free 14-day trial that we have going on right now. We have never offered a free trial before, and so if you're at all interested in joining, you have to do it right now while we have this special offer going on right now. And now more than ever, you need someone in your corner who's going to have your best results in mind and who can actually deliver those results. Okay, so if you've bought and sold trades at the wrong time and you're not confident when the right time to get in is, especially in the current market that we're in right now, you need to know what you're doing. Okay, you can't just haphazardly be buying dips or anything like that. You need to have a strategy and you need to have professional analysis done for you. Okay, so instantly reduce your trades, join the service, and you can do so for free for 14 days with the trial that we have going on right now. I'm going to move my face a little bit. You're also going to be able to see, there's a difference between us and all the other services out there. Okay, for one, we've been around for longer than any of them, not any of them, but most of them, with our over 5 years of being in service. And there's a reason we've been in business for that long, and it's because our clients are happy and they're making money, and we do it in a different way. Okay, and what you're going to get is you're going to get easy to follow real-time trade alerts delivered right to your fingertips, all with 100% profit potential. We are an option trading service, so we do trade options. If you're not familiar with options, you don't trade options, that's okay, because not only do we have educational content for you, but we also have I'm available via chat, or we don't have a, in the terms of the general sense, a chat room, but you can talk to me via a live chat. I have set up on the website that you can contact me at any time, or you can talk to me via text or email. All of the options are available to you. So if you were a member, during the time that we did these alerts, these are just a few examples of trade alerts that we've had recently. You can check those out. You can see what current members are saying about the membership. And it's going to give you the opportunity to grow your portfolio with consistent wins. And I mean that because you're going to be able to see transparent updates to our real-time portfolio tracker. Okay, you're going to be able to watch your account grow alongside ours with the real-time portfolio tracker feature, where every single trade that we make and we alert to members is uploaded into that real-time portfolio tracker. Okay, so you're going to be able to see all the trades that we've ever made here at the Trading Analyst, and that's something that you don't find at most other services. Most other services just make their alerts and they hide them under a rock and hope that you don't ask for results. We're not only showing you our results, but you can come in, check it out for free, and see that we are the real deal and we get our members' results. And I'm confident that when you sign up, that you're going to get those results as well. Okay, so check that out. Again, we have you're going to be able to increase your knowledge immediately, in addition to all the other features, with the full education library that you're going to be able to get when you get access today. So there's many other features. I'm not going to talk your ear off, but I really hope that you check it out. Again, talk to me, ask me any questions that you might have about the charts that I just went over today, or about joining. I'd be more than happy to chat with you. So I hope that you make that decision to grow your account on a consistent basis, and have a professional in your back pocket who cares about your success and who's actually going to be able to deliver that success for you. So I hope to see you in there. It's a free 14-day trial.